Welcome to iGlobal Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, for most of this week I've been showing some concerns that bullish divergence was clearly evident in this pattern with the Australian dollar. And overnight the market mirrored the gold price action. Being a commodity-based currency, the Australian dollar surges from the lows of 74 cents and through 74.50, which was the low yesterday. Taking out the 75-cent handle, the market is now looking to progress further. With the bullish divergence clearly in play, along with the technical implications, the immediate target is seen at 75.50, with the objective of 76.1525, which should give us opportunity to re-establish short positions for the Australian dollar and then eventually see the market turn down and look back towards the established base currently holding at 73.75. My concerns for the euro pattern, along with the US dollar index, is the fact that the dollar index was showing some high readings, as well as the euro was showing some oversold concerns. With the dollar index dropping away from 93.25 yesterday high, it's now looking down towards 91.45, which is about another 100 points. With the pattern fully achieved now from this double top reversal, the break of 121.80 gave us a target of 118 figure. Well, that was reached. And from the turnaround, as you can see, and the break of this downtrend, and also with the technical implications strengthening, could see a move now towards 119.55.65 and higher towards 120.35.45. This would give the trader better opportunity to short the market, as I do expect to see the US dollar soon to resume its bullish sentiment and look higher towards the region of a 95 on the index. This would actually see the euro drop to about 112 on the broader picture. In the short term though, as I say, I am looking for a move towards this area, seen around 120.40, and then re-establish short positions for the sell-off. It's disappointing that the fact that dollar yen couldn't quite achieve the move above 109.70, and now from this few attempts it's made, it's dropping away and looking towards the support region of 108.70.80. I'm still a player from terms of buying dips, but maybe wait towards the 108.20.50 region as a buy zone, and from here look for a recovery and eventually take out 109.70 and look up towards 110 to 111. Well, overnight it was the Bank of England's turn to look at its rate decision, and as widely expected, the market saw the Bank of England keep its rates on hold. The Bank of England said in a statement that weak growth during the snowy start to 2018 was likely to be temporary, but it wanted to see a pickup in the next few months before raising borrowing costs. The Bank of England said its 9 rate setters voted 7-2 to keep rates at 0.5%. Policyholders Ian McCafferty and also Michael Saunders, who voted against the rate rise, agreed on the weak growth so far this year and reflected temporary and erratic factors, but warned that delaying a rate hike risks more sudden tightening later. And as we all know, Bank of England Mark Carney did suggest in April that the central bank may not raise rates in May, and this is what got the sell-off initially from the 143 area. And now with the dojis in play and holding above 134.60.80 area, we can see that the technical implications are slightly strengthening. Therefore, we could see a move up towards 136, maybe up towards 137, purely on the back of the weaker US dollar would give us at least some momentum for the pound, and probably buy an opportunity to see the market rise. But in terms of bearishness, I would say that in the short term, the market should negate any sell-off and look for a rise. As I mentioned earlier, gold did stage a further recovery and rallied $12 overnight and away from this support region, or the bullish foundations of it, as I've been calling it, at 1,300. In terms of the price pattern, we can see further rise up towards 30 to 33 as an objective, with the immediate target coming in at 24. The base, however, doesn't come into play until around 07. There's actually quite emptiness down here. But nevertheless, the technical implications have come through to the firmer case, and with the divergence slightly, did support the gold to recover. Also, the safe haven demand for the yellow metal increased after reports Iran and Israel exchanged missiles in Syria overnight. So that heightens the geopolitical uncertainty as well. So safe haven was where the market went to. And also the fact is that looking at silver, the market is rallied further. And finally, breaking through that 50 region, is looking back to the recent highs that come in at $16.85, as you can see here. Towards here, I would say the market will start unwinding long positions. So I wouldn't be a buy at this stage, as the RSI is getting a little bit high too. And rounded off with oil, well, the market hasn't broken through 72, and at this stage looks like it can easily pull back to $70 or down to 69 before any attempt to the upside. However, a break above 72 would give me a neutral outlook and would take me back to the drawing board to see where the market is heading. Well, that wraps up for today. Thank you very much for joining me. And as always, look out for the intraday report, and I hope you enjoy the rest of the day and a great start to the new weekend.